Welcome to Kyrene. And this is the bit that I'm really looking forward to the most. You know, this will be the best of all of them. It's quite daunting actually. Now, when you're in a room of sort of luminaries with so much sort of talent, it's difficult, isn't it? So all I can say is I've been here longer than everybody else. I ran Leeds for about, I use the term ran loosely, for about 6 years, gave up, working regional management now, reports to Graham Gaddis, and one of my big jobs, aside from that, is really all the people stuff, you know. I do a lot of work with Stuart on training, talent management, new tutor training, that sort of stuff handy as well. So that's my sort of excuse for being here. But really what this Tutor Academy is, it's a sort of a new initiative where we're trying to gather together all of our training for our academic and tutorial staff. Because historically what we've done, many of you will have been on the receiving end of this several years ago, is we get you in when you're brand new, we give you 3 or 4 days and say, right, go forth and multiply, get out there, teach whatever you're going to teach, and that's it. Yeah? That sound familiar? And we're a training company, and that's what we do for training our own staff. Terrific. Yeah? So, we were charged, tail of last year, with designing this academy, and basically this is going to be the framework for training and developing all of our teaching staff as they go through the whole careers with us, from new tutors right through to masters. Obviously, we want to get this as good as we can for you, but your feedback will be absolutely crucial for us. We won't get it all right for sure. We might get half of it right, who knows? But we want to know what we do well, if anything, what we do badly, maybe lots, what you got out of it, and what things you think should be different and improved and changed in the future. So very important. There is no such thing as the Stuart as bad feedback. No. There is just feedback. And if you give us feedback, honestly held, hopefully, no matter how damning it might be, we will say thank you.
My name's Stuart Pedley-Smith, as I've already said, and I'm here in this session really to give you some of the principles behind what we're doing. So I'm hoping that what you're going to take away from this session is the backbone to this course. It's broken down into sort of 3 sections. This is broadly the next sort of day and a half for you guys. The planning, the structuring and delivery. Nice and simple, nice and straightforward. And we're now going to start looking at the planning stage. So what I'd like you to take away from it is something that's easy to follow, something that's easy to understand, so that you can run it through in your mind from time to time. Now, I've been delivering courses in Kaplan for the best part of 15 years, but my real interest arose when I started to think about memory techniques and memory skills. And I became fascinated by the idea that what you'd be able to do is not only transfer information or put information out there, but effectively what you'd be able to do is leave it inside people's heads. So it's that thing rather than the content that became, I suppose, the fascination and the interest. The guys are here, the facilitators are here, in order to coach you. They're not here to tell you anything, they're here to coach you, and we put them on a training course as well, so that they'll do it perfectly. So we haven't just sort of turned up today, although it might actually look like that. The model they're going to use is on here, and we're going to ask you to use that model as well, because we're going to ask you to give feedback on your colleagues.
Okay, class, welcome to the F7 class again. Today we're tackling the chapter 12, which is to do with tax. Okay, don't all switch off now. Don't worry, it's not the F6 style of tax that you've been used to, which is where you get the big thick book like that. For F7, all we've done is we've taken out a tiny little bit like that, and that's all we're going to be looking at. Okay. Now, can I just ask, just to get the ball rolling a little bit, what's the pass mark for F7? How many marks do you score for F7 to pass the exam? 50%. Yeah, most people think it's 50% actually, and it isn't, or it needn't be. It can be as low as 46%. If you know the right way to go about it, and that's what we're going to show you tonight. We're going to show you how to take the pass mark down from 50% to 46%. Okay, just to give you an idea of what we're going to be looking at. Tax, essentially, the tax charge is made of 3 different elements, all contained within IAS 12. First part is the tax charge on the current year, so we've got current year tax. We've then got any previous year under or over provision. And then thirdly, or deferred one, is deferred tax. The deferred tax movement. What I'm going to show you as well as those 3 things is 3 other things, 3 steps. 3 steps to getting your tax right in the F7 exam, which is going to give you at least 3 or 4 marks. You score those 3 or 4 marks, you only need to score another 46. I've immediately dropped the pass mark for you. You only need to find 46 marks from somewhere else. Okay? Right, good morning. I thought we'd start off with a little pub quiz this morning, if you don't mind, a sports round. What's the maximum break in snooker? Anybody?
147.
147. 147? No, it isn't actually 147, it's 155. And the reason for that, see, you're thinking 147, surely it's 147. The reason it's 155 is, if your opponent makes a foul shot and snookers you behind a colour, you can nominate that colour as a red, pot it, then pot a black, that gives you 8 points, and then you make your 147 on top of that, 155. Okay, so it's 155 now. A lot of people think it's 147, it's 155. Okay, so Jason, what's the maximum break in snooker?
155.
Correct. Wilson, I'm going to ask you a question now. It's the same question that I asked Jason. Okay? 155. I haven't even asked you the question, you know the answer. Okay? Now, F7, the F7 exam, if you knew in advance what question they were going to ask you in the F7 paper, how easy would that be? How easy would that be to pass the paper? Well, we don't know what all the questions are going to be, but we know what one of them is going to be. One of them is going to be about deferred tax and taxation. Okay? And that's what we're going to look at this morning. I'm going to show you how to handle that. We're going to show you how to answer that part of the question, which will give you, guaranteed, minimum 3 marks. Possibly 4. Last June, this paper here, it was worth 4 marks, dealing with the taxation. Okay? How good is that? It's going to be good, isn't it? It's going to let you pass the exam. Okay? Because every single F7 paper, since before it was F7, when it was 2.5, same examiner, always asks about tax and deferred tax. Okay? So you know what the question's going to be. Okay? The answer won't necessarily be 155, but you get the idea. Okay? So let's have a look first of all about how the tax charge is made up in a set of accounts. Okay? The tax charge comprises, first of all, the tax on the current year profits. Okay? Secondly, it's made up of the under or over provision from the previous year. And thirdly, deferred one, deferred taxation, deferred tax provision movement. Okay, I'll leave that in. Okay, so that's how the tax charge is made, those 3 things. Okay? And the way that we tackle the question is by also using 3 things. 3 things. What are we going to do? First of all, now you know exam technique. Exam technique. You read the question, the TB question, you set up your pro forma, you put your figures onto the pro forma, and then you go through and make all your adjustments. That's the way you handle one of these sorts of questions. The tax element, the first thing you do, you get the trial balance figures and put those onto your pro forma. The second thing you do, you account for the current year tax charge. Now you know what the double entry is for a current year tax charge. Debit the tax charge in the income statement, you credit the liability on the statement of financial position. Okay? And that's all there is to it, just those 2 things. And then the third thing, we need to deal with the deferred taxation. Now that's where it gets a little bit tricky, but not terribly tricky, and we'll show you how to handle that. Okay, so the first 2, dead easy. Third one, a little bit more to do, but more than manageable. Okay, everybody all right with that? How good does that sound? Well, you've got in front of you, you've got last time's F7 paper. I've got a version of it on the board so you'll be able to follow what we've got. Let's have a look and see what the paper looked like last time. You've got your trial balance in front of you. If you look down there and find the bits that relate to taxation, you'll see there are two lines on there that relate to taxation: income tax and deferred tax provision. Okay. Now, it will tell you in the notes that you've got underneath there, why there is a balance on the taxation account, where it says current tax note 4 and there's a balance of 800 credit. Okay, it will tell you why that balance is there. It doesn't need to tell you why that balance is there because there's only one reason that that balance can be there. It's because you've got an under or over provision from the previous year. Okay, why is that? Well, there are only two things that go into a tax account. There's the provision and there's the payment. Now, if the provision is the same as the payment, there is no balance. However, usually the provision is not the same as the payment, which is going to leave you with a balance on the account. Okay? So it will tell you in the notes it's because of an under or over provision. It doesn't need to tell you that because that's all it can be. Okay? So we are over that. Now, you know in ACCA papers you are allowed your reading time. What can you do in your reading time? Well, you can't write on your answer paper. But you can write on your question paper and you can use your calculator. Okay? So what are you going to do during your reading time? Well, what you're going to do during your reading time as far as tax is concerned is you're going to highlight the bits that you need for tax. Now what we've got there, and I'll just highlight these with a little bit of a red ring, we've got the current tax and deferred tax on the trial balance. Okay? Underneath that, in the notes, just down in your notes, if you look at those notes there, you'll see in note 4, balance on current tax represents, as I said, exactly what I said before, an under or over provision. Doesn't tell you whether it's an under or over provision. You don't need to know. It's a credit balance. Okay? So you know it's a credit balance. It's going to be credited to the income statement. Okay? Now, what I could also do is, so you don't forget what it is that you're supposed to be doing with this, is to remind you what we're going to do when we tackle this question. Okay? Trial balance figures onto the pro forma, current year tax charge and deferred taxation. Okay? In the notes, let's have a look and see what we've got there. Now you can do this during your reading time. Okay? If you look at that tax note, you'll see the required provision for the current year tax is 19.4 million. We're going to do something with that figure. What are we going to do? Well, current year charge. That's your debit and your credit. Okay? You've got a note about the deferred taxation, about the difference in the value of the assets. 27 million. We're going to use that figure. Okay? Now, this was one particular paper where there are 4 marks available for deferred taxation, and the reason is there's something a little bit sneaky going on with the revaluation. Okay? But I'll tell you how we're going to deal with that when we get to the deferred point. Okay? Right, well let's have a look now and see how we're going to handle this question. The first thing you would do is set up your pro forma. Pro forma, I'll just show a version of the pro forma, or a little extract, so that on your statement of financial position, within your non-current liabilities, you'll have deferred taxation. Within your current liabilities, you'll have ordinary taxation. And finally, on the income statement, you'll have the taxation charge, the income tax expense. Okay, just give you a moment to get all that down. Setting up your pro forma. Okay, everybody got that down? Right, what are we going to do? What are we going to do? Trial balance onto the pro forma is what we're going to do. So therefore, you take those figures off the trial balance. That credit on the income tax expense, we're going to write that off straight away. So on the income tax expense, open up your bracket, minus 800. Next, deferred taxation. Non-current liability. Open up a bracket. It's a liability, it's 2,600. That is your first point done. Okay, we've already got a mark for doing that. Next, current year tax charge. The current year tax charge, remember we highlighted that figure, 19.4 million. Double entry, you credit the liability, you debit the tax charge. One, two. Okay. Deferred taxation, no problem with that. What does it say the liability is? Well, it says the liability is based on a 27 million timing difference, a tax rate of 25%, and so the deferred tax provision needs to be 6,750. Okay, we need it to be 6,750. How much is it? It's only 2,600. We're going to add the difference there of 4,150. So we've credited the deferred tax. We also need to credit 4,150 onto the income tax expense. Okay, you add all those up, your income tax expense becomes 19 million. The tax charge there, the tax balance is 19,400. Deferred tax liability is 6,750. The marks for those, and this is what you really want to be finding out. The marks for the 6,750, that's worth 1.5. It's a mark for the taxation. There's 2.5, and your income tax charge is another 1.5. There are your 4 marks. Thank you. Okay, it's Kevin. This is the end. Beautiful friend. Right, good morning.
Morning.
Thought we'd start today with a bit of a pub quiz. Pub quiz stuff? Pub quiz? Haven't got any beer. Some of you may have enough alcohol in your body already to get us into that sort of mood. But we'll go with the 60s pop music question. I think just to start us off. There's a guy in the 60s called Len Barry who had one particular great hit. So, what was Len Barry's big hit from the 1960s? Does anybody know? Any offers? Len Barry's big hit from the 60s got to number 1 in 1964. Was called 1, 2, 3. Okay. So, another question,
Yeah.
Christopher. What was Len Barry's number 1 hit in the 1960s called?
1, 2, 3.
Yeah, it was. Well done. Claire, what was Len Barry's hit from the 1960s?
1, 2, 3.
Okay, Cormac, I'm going to ask you exactly the same question I've just asked these two people.
1, 2, 3.
1, 2, 3 is the answer. You see how easy it is to answer the question when you already know what the question is. Okay, and the answer is 1, 2, 3. Now, we're looking at F7 today. Okay, we're looking at F7. We're going to look at one particular part of the F7 paper. Now, I mark the F7 paper. I've done for a number of years for the examiner Steve Scott. And question 2 always contains the same question, the same type of question. You know it's going to come up. It's in there every single year. Every 6 months you get the same question. Okay? And the question is related to deferred tax and taxation. Everything to do with tax, it's always in the paper. You know it's going to be in there. If you know it's going to be in there, learn the answer. If you learn the answer, then taxation within F7 is as easy as 1, 2, 3. Okay. Now, if you have a look at question 2, you've got that in front of you now. What we're going to do is we're going to go through the standard treatment of the taxation within the F7 paper. Okay. There are 3 steps. That makes it nice and easy. It's 1, 2, 3. Okay, we've got the 1, 2, 3. What have we got?